or buy in and move the market. Whereas when you get 5x or 10x more just broad distribution of the asset, you have more.
Hmm.
There's historically been a cycle of distribution where during bull markets, kind of longer term whale holders will trim their holdings into that bull market and all that liquidity, and then during bear markets, it generally kind of rotates back to the stronger hands. But every cycle, Bitcoin gets a little bit more distributed, kind of like a startup company becoming a publicly traded company over
Right.
time, growing, its holder base gets more diversified. And when we hit
Yeah.
a certain point, the volatility just, I think, will diminish over time, and the uncertainty around the asset will diminish over time.
In a recent interview on the Paul Barron Network, LYN ALDEN discussed the significance of Bitcoin, the dynamics between Bitcoin and stablecoins, and PayPal's new Solana-based stablecoin. At the time of the discussion, Bitcoin was trading around $56,000, having decreased by 3% in the last 24 hours and 4% over the past week. LYN highlighted Bitcoin's role as digital gold, emphasizing its potential for long-term value retention. She also addressed the growing importance of stablecoins in everyday transactions, offering insights into how these two assets can coexist, and what this means for both investors and users. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto Newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
So I consider this CPI report relatively unremarkable. Some aspects were in line, other ones were slightly out of consensus, but nothing particularly surprising. 3% is obviously psychologically notable, but
Sure.
there's no real significant difference between, say, 2.9 or 3.1 in the grand scheme of things. And I think that the kind of the bigger risk for CPI overall is, can they loosen policy while still keeping CPI down? And the driver on the other side of that is largely fiscal deficits. The fact that we're running much larger deficits as a percentage of GDP than we historically do, especially during an economic expansion, and a lot of that is now pretty structural. And so the question is, if they try to normalize rates back down to kind of a neutral rather than tight, and alleviate pressure from housing or alleviate pressure from small business loans, will that come with, say, an uptick in energy prices or other kind of drivers of inflation? So I view this less as, everyone's kind of like, can they get back to 2%?
Right.
My question instead is, can you stick the landing? Can you get down to 2%, and then can you stay there rather than having a whole nother cycle materialize in the years ahead? So in addition to cross-border capital that has made that point a number of times, I've been in the camp that global liquidity is one of the biggest correlates with Bitcoin price.
Right.
And there's really kind of two components of global liquidity when measured like that. One is the rate of credit formation, and then the other one is the strength of the dollar, because the global liquidity is often measured in dollars because a lot of the liabilities internationally, as I previously mentioned, are denominated in dollars. And so that dollar component is pretty important. And so you can either get more rapid credit creation to improve global liquidity, or you can get a weaker dollar around the margins, and that can improve global liquidity because you're basically changing the denominator at that point.
Yeah.
And so I do think that in the years ahead, we'll probably get another positive liquidity cycle. We've been in kind of a stagnation there for a period of time as central
Hmm.
banks try to tighten. I think we'll probably get another move upward, and I would expect, as a base case, for Bitcoin to do pretty well in that environment.
Yeah.
Historically, Bitcoin and stablecoins have kind of been the two killer apps of crypto, right? They're the two things that have really caught on with traction through bull markets and bear markets alike. Bitcoin is an emerging store of value. Basically, it has superior monetary properties than most other monies we're familiar with. But because it's still small, it's still not widely held.
Hmm.
People try to build leverage on it. It goes through these cycles. It's volatile as it reaches its whatever its total addressable market is, or as it gets close to what it eventually will be. Stable coins are just dollars in digital form. It helps serve the need for dollars globally. The demand for them, and there's two main use cases of stable coins. There's one that's basically the unit of account for trading and DeFi on various crypto platforms. A lot of that's going to be on Ethereum. And then the other big usage of stablecoin is basically demand for dollars in the global south. Much of
Right.
it satisfied by Tron. So there's almost like two different worlds of the same asset. As a near-term temporary store of value, like working capital, that's where stable coins are very useful. Basically, the ability to tolerate volatility is somewhat of a privilege. Basically, the more financially comfortable you are, the more you can say, I'm willing to
Exactly.
hold something for the next 4 years. Whereas stable coins, you can kind of think of them as your checking account if you're in one of those environments where dollars are useful.
As we just heard LYN ALDEN discuss Bitcoin and its competition with stablecoins, let's now explore her insights into PayPal's involvement with PYUSD and its implications for the stablecoin market. Alden explains how PayPal's entry into the stablecoin space could significantly influence user adoption and market dynamics. She highlights the advantages of stablecoins in facilitating transactions and reducing volatility, while also addressing the potential challenges they pose to Bitcoin's dominance. LYN offers a balanced perspective, showing how both Bitcoin and stablecoins can fulfill different roles within the financial ecosystem. Now, let's listen to what LYN ALDEN has to say on the Paul Barron Network.
So thus far, network effects have been shown to matter. Liquidity kind of begets more liquidity. And so far, Tether's network effect in this has been pretty remarkable, probably stronger than I would have guessed. I've also been watching some of the yield generating stablecoins, or you can kind of think them as tokenized T-bills, things that try to pass on the yield to the holder rather than the yield being captured by the issuer. And even them, I mean, they've grown, but they're not exactly capturing market share very quickly. And so network effects are clearly pretty strong among stablecoins. And I don't have a firm view on how many there'll be or how much those network effects will entrench, because some of it is like a Boolean outcome of regulations, So some of the onshore ones try to, turn the arm of the state against the offshore ones, and you kind of go back and forth there. So there's some outcomes that I wouldn't try to predict. I do think it's rational for these various entities to try to get into the stablecoin market, given how big and potentially profitable it can be. But it's hard to judge the outcome. So I think that given status quo, I think Tether's in a very strong position. A prime dealer now, for example, has been more supportive of Tether than the rivals onshore. And so, given an absent of very strong efforts to change that, I think the status quo likely continues. I think that domestically, obviously, some stablecoins could continue to gain market share, but globally, Tether is so far in the lead that it would take pretty heavy disruption for that to change. So my assumption is just current momentum continues. So I think that the biggest use case here is international. In the U.S., we generally have fairly good payment systems. Where we run into issues is when we're conducting business across border, and that's where stablecoins have been very useful. Some of it has been regulatory arbitrage that things could be easier in the banks as well, but they generally have this more red tape on things. I don't try to judge timelines too much, and like I said, there are Boolean outcomes, legal outcomes, or lawmaker outcomes that I'm just not the expert in. But I just continue to be structurally bullish on the market cap of stablecoins. And for what we've seen so far, there are fairly strong liquidity network effects for the leaders. I think of a long time. I think we're 15 years in, and I think over the next 15 years that trend's going to continue of less volatility. Basically, it's in my view mainly around it being widely held. If something's not widely held, one big player can leverage and blow up and move the market.
In summary, LYN ALDEN provides a comprehensive analysis of Bitcoin's current position and its ongoing competition with stablecoins, highlighting the importance of both in the evolving digital finance landscape. We'd love to hear your thoughts as we continue the discussion. What do you see as the future of Bitcoin in a world increasingly dominated by stablecoins? How do you think PayPal's stablecoin will impact the market? For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.